the joint statement from US and India is finally out, and a lot more details now emerging of that trade deal between India and the United States. This next 30 minutes, you're going to decode every little aspect of that joint statement and try and understand what this means for India, what this means for US, and what it means for bilateral trade. Well, India and the United States on Saturday released a framework for an interim trade agreement where the government has agreed to eliminate or reduce tariffs on a wide range of US goods, including farm products. But the government still insists a lot of protection has been given to India's agriculture and dairy sector. Now, the India-US trade pact will open a $30 trillion market for Indian exporters, says Commerce Minister Piyush Goyal, especially for MSMEs, farmers, fishermen. And this all coming from that early morning tweet that we saw from Minister Piyush Goyal. He also said the increase in exports will create lakhs of new job opportunities for the country's women as well as youth. Now, US in return will slash reciprocal tariffs on Indian goods to 18%, something that the US president had put out in his Truth Social post earlier this week as well, providing a huge market opportunity in key sectors, export-oriented sectors, including textiles and apparel, leather and footwear, plastic and rubber products, organic chemicals, home decor, artisanal products, select machinery, as well as, of course, India's gems and jewelry sector. Now, India's Commerce Minister Piyush Goyal further stated that tariffs on import duty will be down to zero on a wide range of goods, including generic pharmaceuticals, gems and diamonds, as well as aircraft parts, thereby further enhancing India's export competitiveness to further the cause of Make in India. Now, India will also get exemptions on aircraft parts, tariff rate quota on certain auto parts and negotiated outcomes on generic pharmaceuticals, leading to tangible exports of grain and export gains in these sectors. Now, the minister has also gone ahead and said that the agreement reflects India's commitment to safeguarding farmers' interests, sustaining rural livelihoods by completely protecting sensitive agriculture and dairy sectors. Let's quickly take a look at what Agriculture Minister Shivraj Singh Chauhan had to say.
ये ट्रेड डील जो प्रधानमंत्री जी के नेतृत्व और मार्गदर्शन में हुई है, ये ट्रेड डील डिप्लोमेसी, डेवलपमेंट और डिग्निटी का एक नया उदाहरण है। हम विवाद नहीं, संतुलित संवाद में, ताकतवर संवाद में विश्वास रखते हैं। और मैं आज प्रधानमंत्री जी को हृदय से धन्यवाद देता हूं। उन्होंने कहा था किसान हित सर्वोपरि है हमारे लिए। किसानों के हितों को पूरी तरह से संरक्षित किया गया है। किसान हित पूरी तरह सुरक्षित। हमारे मुख्य अनाज, फल, मुख्य जितनी हमारी फसलें हैं, हमारे मिलेट्स सब सुरक्षित है। डेयरी उत्पाद सुरक्षित है। कांग्रेस और अपोजिशन कुंठित है, मानसिक रूप से परेशान है, मैदान में मुकाबला नहीं कर सकते। एक के बाद एक हार ने उनको हताशा, निराशा और कुंठा से भर दिया है और इसलिए अंधा विरोध कर रहे हैं। झूठ की मशीन बन गए हैं, वो अफवाहों के बाजार हैं और इसलिए वो अफवाहें फैला के अराजकता का वातावरण निर्मित करना चाहते हैं। लेकिन किसान हित पूरी तरह सुरक्षित। उल्टे मैं ये कहता हूं कि हम चावल निर्यात करते हैं। आपको पता है कि हमारा चावल यूएस में भी कितना जाता है। 63,000 करोड़ का चावल हमने निर्यात किया था। हमारे निर्यात को बल मिलेगा टैरिफ घटने से। हमारा चावल, मसाले, इवन टेक्सटाइल, जब टेक्सटाइल का एक्सपोर्ट बढ़ेगा तो कपास के किसानों को फायदा होगा। ये सर्वथा भारत के किसानों के हित में है।
All right, that's the Agriculture Minister Shivraj Singh Chauhan. Let's also quickly take a look at what Commerce and Industry Minister Piyush Goyal said. Including other things, he also mentioned that this opens a $30 trillion market for Indian exports to the US.
US ट्रेड डील में भी भारत के जो सेंसिटिव सेक्टर्स हैं, एग्रीकल्चर को लेके, डेयरी को लेके, उनको संरक्षित किया गया है। हमने पूरे देश भर से आई हुई खबरों को देखा। चारों ओर उल्लास है। हमारे जितने लोग भारत के निर्यात में जुड़े हुए हैं, भारत के टेक्नोलॉजी सेक्टर से जुड़े हुए हैं, भारत में नई आधुनिक टेक्नोलॉजी लाकर यहाँ ग्लोबल सप्लाई चेन्स, ग्लोबल वैल्यू चेन्स का हिस्सा बनना चाहते हैं, ग्लोबल कैपेबिलिटी सेंटर्स लगाना चाहते हैं, निवेश करना चाहते हैं। अलग अलग क्षेत्र जो विशेषकर लेबर इंटेंसिव है, जिसमें लाखों करोड़ों लोगों को नौकरी का, रोजगार का।
All right, so that was Commerce and Industry Minister Piyush Goyal speaking earlier at that press conference, reiterating that India's farm sector has been protected. Let's quickly introduce our battery of experts who are joining us on the show. Mitali Nikore, founder and Chief Economist, Nikore Associates; Barnik Chitran Maitra, PV Investor, Managing Partner, Chrysalis Equity; Dr. Laveesh Bhandari, President and Senior Fellow, CSEP, and our very own R Sridharan, Editor, International TV9 Network. Shri, let me first begin with you. A lot has been said, a lot has been done, and now the joint statement is out, which suggests that yes, indeed, India's agriculture sector, India's farm sector has been protected. Let's take all these issues in the joint statement one by one, but let me first begin with the agriculture sector. India has agreed to eliminate and reduce tariff on a whole host of agri products. This includes dried distillers, grains, red sorghum used for animal feed, tree nuts, fresh and processed fruits, and a lot more. But the core, India's core agriculture sector and dairy sector has pretty much been kept out of this ambit of zero tariffs on American goods. Is that right?
Absolutely, Kartik. The first good news is that we have now moved from writing the preface to writing the first chapter of the India-US trade deal. So that's good news. Like you said, this also implies that there is a broad agreement between India and US on what is a holy cow, what are the areas which India will not be willing to go into in terms of removing tariffs, reducing tariffs. So that's been made clear from the initial framework which has been put in place. Second, the confirmation that the tariff will now be dropped to 18% on India's garment exports and then gems and jewelry. That's great news because I was speaking to one of the largest exporters in India who exports to US. So he said, so far, there was a real risk of the US buyer moving away from India because so far the cost, the extra burden of the tariff was being shared half and half by the buyer and the seller. So now this removes that uncertainty while, from zero, we're going to 18%, but that's okay. I mean, it's still better than 50%, right? So that's the other big development and positive outcome from this first initial framework that has been put out. And the fact that India has also agreed to buy $500 billion worth of, energy and a lot of, high-tech equipment, including defense, some aircraft parts over a 5-year period. That's also, I think, great news because it strengthens India's strategic alliance with the US. So overall, this is a very good development. Pharmaceuticals were anyway, exempt, even under the punitive tariffs, the Liberation Day, even prior to the Liberation Day, it was zero. So I don't think it is a major thing. And when Minister Piyush Goyal talks about a $30 trillion, access to a market of $30 trillion, he's obviously referring to the US economy itself, not to any specific, goal.
Absolutely. Okay, let's bring in Dr. Laveesh Bhandari. Dr. Laveesh Bhandari, while we have, just touched upon agriculture briefly, I also want to talk about the unfinished agenda. And that unfinished agenda pertains to India stopping to buy Russian oil. That is not, again, a confirmation that we have got in the joint statement. It obviously does not mention Russia or India's energy sources. But one of the unfinished agendas continues to be the decision on whether or not India will stop buying Russian oil. That is number one. Number two is also, can India really afford to double its US imports? Right now, we are looking at US imports of about 50 billion or so, give or take, every year. But for us to be able to buy $500 billion worth of US products, including energy, I would assume, in the next 5 years, it means technically India needs to double its requirement of imports from US from about $50 billion to about $100 billion per year, sir.
So first, can India import $500 billion worth? And the answer is absolutely yes. There is a whole range of investments, especially in the energy sector, that India needs to make over the next 5 to 10 years. And so this would be a very large component of it. I'm told that already there's a large order for Boeing's worth about $80 billion, which is almost about to be signed. So, in a fast growth economy, this kind of funds is absolutely possible. So I don't think $500 billion is going to be a problem for us.
$100 billion is not a problem, but what is the kind of trade-off that we are seeing, let's say, with respect to Russia, sir? Because Russian oil, in any case, yeah, I was reading some numbers in the month of December. We had dipped our Russian oil purchases to about $2.7 billion. Give or take $30 billion worth of Russian oil now getting substituted by other players, including US and, of course, the aircraft order that you mentioned. So overall, $500 billion, I hear you, is absolutely achievable over the next 5 years. Is that right, sir?
Absolutely. And Russian oil, it's spare change. It's really nothing.
Okay.
We can definitely do without it. Without it, it's not.
We were doing it without the Russian oil.
We were doing it, but of course, Russia deep discounted it. I doubt we're going to get those kind of discounts when it comes to American energy products. But also, just a clarification, Barnik, if you can help us with that, there is absolute no mention of steel and aluminium, which continues to attract higher tariff. It is outside of the reciprocal tariff of 18%, which was earlier 25%. Can we assume, barring aircraft parts, automotive components, the rest of the steel and aluminium exports to the US will continue to be tariffed at about 50%, which was stated earlier by President Trump?
So I think let's be careful on the steel and aluminum, because first is the text of the announcement, right, which doesn't refer steel and aluminum directly, but it talks of aircraft parts and automotive component parts, which by the way also have steel and aluminum components in it. I think there's a reference to the US Section 232, which is the punitive section under which tariffs have been enforced on steel and aluminum. It appears that steel and aluminum still needs to be jointly negotiated, while there's an exemption for the steel and aluminum used in aircraft parts and auto component parts. So again, I think the agreement is quiet on that. Let's see the detailed text of the final agreement which gets signed. This is just a framework, right, for the announcement. I think it will still take many more months for the final bilateral trade agreement to be signed, by which time, hopefully, the negotiated settlement, both on steel and aluminum and also on generic pharma products, will be concluded. And there's a slight indirect reference to that in the text, right?
Yes.
Although analysts are pointing out that they do expect that the steel and aluminum tariffs may come down to a more sensible level once the joint negotiations are concluded according to US Section 232.
All right. So still a few unanswered questions there, especially with respect to steel and aluminium, as well as the overall sweeping 25% tariff on auto and automobile parts. Well, it seems that at least automobile parts are very clearly mentioned 2 or 3 times in this joint statement. So we can fairly assume that those parts, automotive parts and automobile parts, will attract the lower 18% tariff now. Let's move on now to Mitali Nikore. Mitali, India's export potential, given the fact that it has received budget SOPs, it has received that 10,000 crore rupees of an MSME fund, and of course all the other FTAs that we've done over the year. Now India's exports and very, very specific labor-intensive sectors mentioned in that joint statement. Talk to us about India's export story from here on. How does that take off?
Thanks, Kartik. So I think, let's think about this entire week with a little globe in front of us. And when we do that, we'll find that India is trying to position itself right in the middle of that globe. Because we have an FTA with Europe, which gives us duty-free access to the European markets, imports and exports. We actually signed an FTA with the GCC countries just day before yesterday. So that gives us access to the Gulf market. We now have, the Indo-US deal shaping up. And earlier on in the year, we also signed an FTA with the United Kingdom. So essentially, India is now placing itself very strategically right in the center of all of the trade which is taking place, of the export, re-export of refined oil products. Of course, this benefits our MSMEs and labor-intensive industries. And also this creates corridors of free and preferential trade, all of which go through India. So this actually allows India to become a very clear manufacturing hub for a number of markets. I just have one more point to make on, this point that we were talking about India's investment. And I just want to clarify. So they said that in the joint statement that $500 billion of investment is expected from India over 5 years. Now, if you look at our current investment in the US, it's
just to point out, it doesn't mention investment. It actually mentions purchases. The joint statement is talking about India's purchase. So I don't think India, unlike Japan, unlike South Korea, there hasn't really been an investment commitment from India as far as investing in the US goes.
Exactly. So that in that 500, so currently we're doing about 50.
Yeah.
And all of the major commodities that we're already purchasing, be it mineral fuels and oils, precious stones, machinery, aircraft parts, coal, even coal, these almost make up 80% of that 50 billion that we're already purchasing from the US.
Okay.
The second thing is that the scale up is not expected to be exactly $100 billion a year.
Sure.
The scale up is
It's
expected
500
to
over the next 5 years, not necessarily, equated
exactly.
equally across 5 years.
This actually is very much in favor of India because these are purchases we would have made anyway, and they
Right.
align with our import basket completely. So I think this particular point has to be emphasized that India has actually negotiated a very favorable deal when it comes to expanding our purchases.
All right, a favorable deal. Shri, let's get into another specific clause in the joint statement, and that is about aircraft and automotive parts. Now, the fact that that US is going to remove all tariffs on India's export of aircraft and aircraft parts, how big is that manufacturing market here in India? How much of the aircraft and aircraft parts that we make here in India are actually relevant for the US market? Does cutting tariffs to zero really add to India's heft and India's momentum when it comes to exports?
So let me address the easy part, which is that how much of the parts that we make for aircraft companies are relevant. If you're making them, obviously there's a buyer who's out there, whether it's a Boeing or let's say a Lockheed Martin or whoever. So I don't think that's an issue. Just going back to your question, Kartik, on how much of help is this going to be for India's exports specifically? We have to look at in the framework of what happened, with Liberation Day tariffs.
Right.
So are we better off compared to pre-Liberation Day tariffs? I don't think so. But are we in a much better position after the tariffs were raised and they've been brought down? Does this now give Indian exporters a small edge, even in garments, for example, let's say compared to Bangladesh, which has a 20% duty, we have 18%. Does it give India a small edge? Yes. I think so. We are on the whole better off, but are we better off really from a Liberation Day era? We are not, because
Trump's
effectively
second term in office era definitely not better off when it comes to that.
Yeah. So for high-tech component exporters, this is definitely a good deal.
Okay.
And I think there's also a lot of push for, MROs and all those things. So we're not just talking about exports, but also about when these facilities come in, the repairs, all these things start happening in India.
Yep.
We'll have, these companies supplying locally as well. Okay. So it's not just about exports, but about the overall strengthening of the, of these suppliers from a competitiveness. And Europe is emerging as a significant market for these high-tech parts as well, Kartik.
Right.
So on the whole, this is good news.
All right, on the whole, good news. Dr. Laveesh Bhandari, we have been speaking about tariff all year long, but then there is also this question on non-tariff barriers, and the joint statement is fairly clear on that as well. And it seems that there's a 6-month window available to India to reduce or eliminate barriers on US medical devices. There's also the 6-month window to eliminate restrictive import licensing and then also reduce restrictions on US-made ICT goods. Now, what are these non-tariff barriers, sir? And is 6 months okay? Can India agree to sort of, cut down on these restrictions and these licensing requirements from a regulatory standpoint and from an economic standpoint? What does this really mean, sir? Can you break it down for our viewers?
So non-tariff barriers are effectively amongst the most expensive forms of preventing trade. And they have many different impacts. So, and clearly, a lot of those are impacting trade with many countries, including the United States. And many of them, or at least some of them, the government has already started reducing those barriers. There was, for instance, the quality control orders. There was a significant movement in reducing those. Of course, much more needs to be done, but the fact is that the government is already on that path. So some of these elements that are being talked about right now are definitely on the path that the government already has been, not vis-a-vis the U, not just against the US, but for almost all other countries as well. So I don't think this is going to be a difficult part to do, because politically, I think now we are fairly clear that these NTBs are not really helping our export competitiveness. Just like to make another point, there is a problem, which has already been made. 18% tariff rates is higher than 0%, which was ruling before.
Of course.
Right? Now, where is that 18? Who's going to bear that cost? A large part of it, at least let's say half of it, would be, let's say, borne by the manufacturing or the exporter.
Okay.
Where is that 10% going to come from? Our cost structure hasn't gone down by 10%. So they need to absorb some of it, or imports need to be less costly. There is no other way to reduce that 10%. So therefore, reducing these non-tariff barriers are actually in India's interest. So I think agreeing to this is essentially a positive statement because it's just going to be something we'll anyway need to do to be able to get our export competitiveness.
All right, Barnik, but this 18% tariff coming again on the back of a 6% reduction, depreciation of the INR. So technically, can we say when it comes to India's exports, the tariffs are give or take as compared to last year, just 12% and not 18%?
Yeah, so again, see, listen, the tariffs are sensible for us to access a market like the US. I think as economies become more export competitive, or you want to do more exports, I think we already have the lever of our currency, which is also in a way not fully convertible and semi-controlled. But let me just make a very simple point responding to also the point you were asking on aircraft parts.
Yeah.
Just by having a favorable trade deal does not create exports for us. I think the more important thing is the sector has to be export competitive, both on a point of cost and also quality, right? So again, I think, again, responding to aircraft parts, I think India is already very competitive on a quality and cost basis for automotive components, not so much for aircraft parts. So again, a lot of the sectors mentioned here, which may benefit, are often ambitious. Let's again talk of textile and apparel. I think before Trump came or before April, I think India was struggling to supply textiles to the US because we are very competitive neighbors and partners who are providing this set of cost. Now, if you look at Europe, where the trade barrier was more, where actually Bangladesh enjoyed only a 5 to 10% tariff rate and India enjoyed 30%. So there's a little bit of an equalization here. But when it comes to the US, I wouldn't magically expect that a lot of these sectors will export a lot more just because the tariff rates have come down or we are within 1% plus or minus of our neighbors.
Sure.
I think the imperative is more on the industries to be more competitive, both on a cost and a quality point of view. And obviously, the currency depreciation helps us to be a little bit more cost competitive.
All right. Okay. Let's. I mean, that of course is a lingering question because these are again labor-intensive sectors. These are low-cost exports, not necessarily high-value exports. So, how much of an export advantage is India going to get in dollar terms is something that we will have to wait for data to come and tell us. But let's move on to now this $500 billion commitment, Mitali, that you were speaking about earlier. And among other things, this also includes U.S. energy, aircraft parts that we've spoken about, precious metal, technology products, coking coal, as well as GPUs used for data centers. So I want to first start with the GPU part of this because that is something which is absolutely central to the AI-driven investments, data center-driven investments which are coming into India. Now, the fact that India will, among other things, also purchase GPUs from the US. What does this mean for US big tech and who's actually the winner here? Is it going to be India's AI for all or is it going to be US big tech?
But why can't it be both, Kartik?
Will it be both?
Both. Hopefully, it should be both.
Okay.
I think the India AI Summit will also tell us more, but I think it should be both because let's think about this, right? India's IT industry is already struggling after yesterday's launch of Claude Cowork, and I've already started using Claude Cowork. It's literally going to replace a lot of the coding power that India has developed and other countries have also developed. I mean, this is the future, and even the Zoho co-founder tweeted about that. Now, in this case, what is the survival strategy, or rather the strategy for Indian IT firms to continue to thrive? It is to link in with the big tech of the US and become service providers and become, people in that supply chain so that we are completely integrated with the US big tech's growth. It's not like the US big tech companies are just going to do everything internally. They are also going to require information technology power to actually move ahead in their service provision to other companies. So Indian IT can actually benefit a lot from being linked in, but that does require us to set up the data centers, to set up the GPUs. And if we are having this trade deal with the US where the GPUs are coming from the US, again, more of a reason and an incentive for US big tech to continue to invest in India's IT capabilities.
All right. Okay. And Dr. Laveesh Bhandari, we are coming almost to the end of the show. I'll give you the penultimate ultimate sort of question before I go to Shri to close it. But I want to understand also this clause of rules of origin, sir, because I think the joint statement very clearly talks about rules of origin and wants to ensure that it's only goods which are made in India get the preferential treatment in the US and vice versa. So talk to us about the importance of rules of origin and what are the kind of commitments India will have to make in terms of what percentage of a product that India exports to the US should really be originating from here in India.
So the rules of origin essentially says what part of the whole product is actually produced in that country. One of the problems that the United States is facing is that it clamped down on Chinese imports, and a lot of those imports started to come in through Southeast Asia,
Mexico.
So essentially, rules of origin protect the United States from effectively China finding other ways. Now, this is very much in line for India signing it, line with our own concept of Atmanirbharta. We do want to produce a large part of or at least be accountable for a large part of the value added of a product. So I'm sure this would not have been a problem area for either India or the United States, the rules of origin issue. It's actually very much in sync with each other.
Very much in sync. We've just got about less than a minute left. Shri, sum it up for us. Overall, a hard negotiation, a fairly difficult year for Indian negotiators, the Indian economy, the Indian stock markets. What are you expecting Monday morning? What is the kind of reaction that you're expecting to see on the Indian markets and, of course, going forward on the Indian economy?
So quickly on the market, Kartik, we've already seen the market react to that. So I don't think there's going to be a significant reaction.
Now that the details are in, now that there is more clarity on the protections.
There's nothing in the details which is like really going to set the market afire. Okay. But I think what we should all be celebrating is the fact that there was an urgent need for the India-EU-US relations to get back on good terms. And this, the interim framework which has been announced is clearly indicative that at least our relations with the US are not going to get worse. So there is now improvement that's like, in the offing. So that's, I think, a big relief because neither US nor India can afford to, antagonize each other or break up a relationship, which is going to be a defining relationship of this century, Kartik.
Right, let us leave it at that, Shri. Thank you so much. And let me take this opportunity to also thank all the other guests who took time out early morning to join us. Mitali Nikore, Barnik Chitran Maitra and Dr. Laveesh Bhandari and, of course, R Sridharan. Thank you so much for your time. Pleasure having you here.